Well, I'm looking at the aluminum prices, Sonia, because this is a metal that has done quite well in the last 1 week. Actually, we've seen firmer prices onto this one, and this is on the back of the Red Sea disruptions. We do understand that around nearly 3 million tons per annum of aluminum passes through this route, and there are delays. There are also higher freights that aluminum is dealing with. And then you have the crude oil prices as well, trading at above $80 to $85 between that range, and that's adding the premium to prices here. The markets also are watching out statements, various developments, where the street expects EU to actually introduce further restrictions on imports from Russia, and aluminum could perhaps be one of those metals. There already are statements from Poland, Baltic states calling from European Union to ban Russian aluminum coming in. We do understand that on aluminium warehouses, almost 80 to 85% aluminum that is put in is coming in from Russia there. The Yunnan smelters also are expected to cut output due to limited power supply. This comes in from China. So we are looking at production concerns from here as well. Remember, 2023, aluminum production was at record high in China, but winter period usually is a time when you see the production go down. And it also is about the Chinese New Year, the 1 week holidays that would come in the month of February. So we are looking at activity actually slow down ahead of that as well. Having said that, well, we are looking at weak Chinese demand. As of now, the economic data has been quite uneven. While we have seen the reserve ratio requirement being brought down, but the other data clearly hasn't seen a directional change as yet, and that's what the markets are seeing in sense of correction there. This is what we've seen in sense of European imports coming in from Russia. So while 2022 was 1 million ton, in 2024 the estimates are that it would be less than half of that at just about 400,000 tons there. So this is the one thing that the street will watch for, and is some pressure that you can expect in case of aluminum rises there. The other is the surplus part of it. In 2023 we were dealing with a surplus of 800,000 tons. Now this year the expectation is that that surplus is going to be lesser because the Europe restarts have not come in yet again. The markets believe that it will be almost 2025 that we will see aluminum smelters coming back online. If you look at the forecast in sense of prices, well, most banks, brokerages believe that you could be looking at higher prices. This is what we've done in sense of prices in the last couple of years, not very great years. And this is after 42% of gains in aluminum in 2021. So as you can see, it has been consolidation, even some profit taking that we've seen in 22 and 23. 24 has started on a firmer note, but when you look at until now, we are down by about 1% even now. So we are trading at around 22.50 there, and that's exactly where ING expects the prices to average for the rest of this year as well. The others are slightly more bullish. Fitch and Morgan Stanley believe that 23.50 is where the aluminum prices could go to. Citi most bullish, expecting the prices to go all the way to 2,800 as an average for this year.
All right, Manisha, thanks very much for that. So that's commodities and focus. We'll take a break here. Lata will get chatting with Dinesh Kanabar, Chief Executive Officer at Dhruva Advisors, and Sudhir Kapadi, a partner tax and regulatory services at EY, about their tax relief expectations from the interim budget 2024. Stay with us.